You know that feeling, right? You walk into a bank to open an account and suddenly you're hit with a mountain of forms and requests for a dozen photocopies. We've all been there. But what if I told you that all that paperwork is actually part of something way bigger and way more important than just red tape? Today, we're going to pull back the curtain and find out exactly why your bank needs to know who you are.
It's the big question, isn't it? Every time you're asked for one more document, you can't help but wonder, is all this really necessary? Well, the short answer is yes, and we're about to dive into the real reason why, as we unpack the world of Know Your Customer, or KYC rules.
So, the story behind all this paperwork, it actually starts with a huge global fight against some very, very serious crimes. These rules, they're not just there to make the bank's life easier. They're our front line of defense against money that's being used for some really bad stuff.
At its heart, KYC is designed to stop two major threats. On one side, you have money laundering. That's the art of taking dirty money from crime and washing it so it looks clean and legitimate. And on the other, you have terrorist financing, which is exactly what it sounds like, providing money for destructive, violent acts. Both of these rely on the banking system to move their cash around, and that's exactly what these rules are meant to prevent.
And make no mistake, this is not just a local issue, it's a global one. Fighting this kind of crime needs everyone to be on the same page. Your neighborhood bank branch? It's actually a small part of a massive worldwide effort to keep the entire financial system safe and secure. So who's in charge? Who writes the global rulebook for all of this? Well, that would be the Financial Action Task Force, or FATF. You can think of them as the international referees for financial security. They're the ones who set the standards and the best practices that countries all over the world agree to follow. And that brings it right back home. Because India is a member of the FATF, we've made a promise to the rest of the world that we'll uphold these standards. That commitment is the direct line from this big global policy to the rules we have to follow here. Okay, so let's see how all this global strategy actually plays out on the ground in India. How do we take these international standards and turn them into something real? Well, that massive job falls to our financial watchdog, the Reserve Bank of India, or the RBI. It's the RBI that takes those big ideas from the FATF and translates them into the specific KYC directions that every single bank in our country has to follow. They're the final gatekeeper. And this gets us right to the heart of it. Know your customer. It is so much more than just writing down your name and address. It's a formal, legally required process with one crystal clear goal: to stop criminals from using our banks for their dirty work. Okay, so we've looked at the big picture, the global fight against crime. Now let's bring it right down to you. How does this all affect you when you walk into a bank? Well, a good way to think about it is that your KYC documents are kind of like your passport to the financial world. You see, when a bank says they're doing KYC, what they're really doing is a process called customer due diligence, or CDD. This is the active part. They don't just take your word for it. They have to go and verify your identity using official, independent sources to make absolutely sure you are who you say you are. And this isn't some random checklist. The RBI requires every bank's KYC policy to be built on 4 solid pillars. First, they have to decide who they'll even accept as a customer. Second, they have to figure out the potential risk that customer poses. Third, they have to properly identify them. And fourth, it doesn't stop there. They have to keep monitoring transactions for anything that looks suspicious. It's a constant cycle. So let's talk about that third pillar, identification. How do they actually do it? Well, they use a specific list of documents called officially valid documents, or OVDs. These aren't just any old ID cards. They're a special set approved by the RBI. And I'm sure this list looks pretty familiar to you. We're talking about things like your passport, your driver's license, your Aadhaar, your voter ID card. But here's the key question. Why these specific documents? It's because they're all issued by the government, they have security features built in, and they're really hard to fake. They are the gold standard for proving your identity. And hey, the process isn't stuck in the past. To make our lives easier, the RBI now allows banks to use a video-based customer identification process, or VSIP. Yep, that means you can get fully verified through a secure video call from your own home. It's proof that security can keep up with technology. All right, so KYC for individuals makes sense. But what about for companies, trusts, or partnership firms? Well, that's where things get really interesting. The whole game is to peel back the layers of a company and find the actual people who are in charge. To do that, banks have to identify the beneficial owner. And this concept is absolutely crucial. You have to forget about fancy titles like CEO for a second. This is all about answering one simple question. Which real, living, breathing person ultimately owns or controls this company and gets the benefits of its money? It's about cutting through corporate structures to find the human being pulling the strings. So how do banks pinpoint that person? Well, the RBI has laid out very clear rules. For a company, for instance, any single person who owns more than 10% of the shares or profits is automatically considered a beneficial owner. For a partnership, it's more than 10% of the profits. These rules are designed to make it super difficult for people to hide behind confusing company structures to launder money. It forces everyone to be transparent. So let's bring it all home. We've gone from the annoying paperwork at your local bank all the way up to global task forces fighting crime. It's time to step back and look at the big picture one last time. You know, you don't even have to take my word for it. The RBI's own rulebook puts it perfectly. The goal of all of this is to stop banks from being used as a pipeline for dirty money and to make sure our entire financial system stays stable and trustworthy. So the next time you're asked for your ID at a bank, just remember this. That piece of paper isn't just a hassle. It's your small but really vital contribution to a massive global shield that protects all of us. You're actually playing a part in keeping our financial world safe.
And that leaves us with one final thought to chew on. As our lives and our identities become more and more digital, how is this fundamental need to truly know your customer going to change? That's a question that's going to shape the future of banking, security, and technology for all of us.